The $1.75 trillion secret, why South Texas is the new Wall Street. There is a massive, tectonic shift happening in the global markets right now. If you aren't paying attention to the southern tip of Texas, you are missing the most consequential financial event of the decade. Most people think the space age was something that happened in the 60s. They are wrong. It's happening right now, and it's about to create more wealth than any IPO in history. On Friday, May 22, 2026, SpaceX successfully launched the V3 Starship, a monstrous piece of engineering that proves the company's path to operational dominance is no longer a what-if. It's a reality. We aren't talking about prototypes anymore. We are talking about a $1.75 trillion juggernaut that just filed its S-1 with the SEC, targeting a June listing on the Nasdaq. This is the biggest story in the history of capital markets, and here is the brutal truth. By the time the ticker SPCX hits your trading app, the IPO premium will be fully priced in. The smart money isn't waiting for the listing. They are already positioned in the companies that form the invisible backbone of this trillion-dollar giant.
The pick and shovel strategy. You don't need to wait for SpaceX to go public to gain exposure. The most aggressive investors are targeting the supply chain proxies, the companies whose revenue is mathematically tethered to every Starlink terminal shipped and every Starship launched. 1. ST Microelectronics, NYSE STM. If you want to understand the engine of SpaceX's valuation, look at the Starlink user terminal. ST Microelectronics has a decade-long deep tech partnership with SpaceX. They aren't just selling parts, they are co-designing the proprietary high-frequency antenna chips that make global satellite internet possible. With Starlink already serving over 10 million customers and scaling rapidly, STM isn't a speculative bet, it is a massive volume play. Every new terminal installed, every new satellite deployed creates a recurring revenue stream for their silicon fabs. 2. EchoStar, Nasdaq SATS. This is the hidden play that most retail investors are completely ignoring. In late 2025, EchoStar finalized a landmark deal, transferring massive swaths of wireless spectrum to SpaceX. This wasn't just a sale, it was a strategic alignment. The market is currently undergoing a massive repricing as investors realize that EchoStar's valuation is now effectively tied to the success of SpaceX's global network expansion. It is the closest thing to a proxy share you can find before the IPO bell rings.
3. Rocket Lab, Nasdaq RKLB. While SpaceX dominates the heavy lift sector, the market is beginning to rotate towards specialized, high-margin aerospace infrastructure. Rocket Lab's upcoming Neutron rocket is positioning them as the only viable alternative for national security and constellation deployments. As SpaceX's valuation skyrockets, the relative value trade, buying the high-quality alternative, is where institutional players are parking their capital to hedge their bets. The momentum framework. These stocks aren't just names on a list. They are high-volatility, momentum-driven assets. The traders who win in this environment don't guess. They follow the flow. Look for the surfing the average setup. After a news-driven breakout, don't chase the candle. Wait for the consolidation. If a stock pulls back to its 10 or 20-day moving average on lower volume and holds that line, that is your institutional floor. That is where the smart money is defending their positions. Your entry is the breakout above that consolidation range on volume. It's simple, it's disciplined, and it removes the emotion that kills retail accounts. The bottom line. The SpaceX IPO is projected for mid-June 2026. The prospectus is public, the valuation is staggering. The XAI merger has turned this company from a rocket maker into an AI-powered aerospace titan that controls the data, the launch, and the infrastructure of the future.